We are back working on practice exam 6, problem 7. So this is the biggest question on the test, and you will definitely have to prepare a balance sheet, and you'll have to prepare the whole thing, not just the equity section. And you'll be given an adjusted trial balance. So that's nice because, to tell you the truth, these things are in order. So you only have to worry about where they cut off for current assets, property, plant, and equipment, current liabilities, long-term liabilities, paid-in capital, and retained earnings. So that's kind of nice. So let's take a look at our balance sheet and remind ourselves of a few things, because it's been a while since we looked at a full balance sheet. So this is a trial balance. It just is where we're trying to balance, and these are the debits and credits. The balance sheet is the one where we go assets, liabilities, stockholders' equity, and report out. All right, so on a balance sheet, there's only assets, liabilities, and stockholders' equity accounts. So we aren't going to use any of these accounts, right? So don't even worry about dividends, revenues, and expenses. Don't worry about them. Now, retained earnings, yes, retained earnings go on the balance sheet, but you don't use this one, right? That's why I give you this statement of retained earnings. You have to use your newest one, right? So, yes. So, no, right? So, and then there's the rest of your stuff. Assets, liabilities, equity accounts. You just have to figure out which is which. All right, now, you may call the first set of accounts. So first set of accounts are going to be your current assets. So here's how I remember how to separate current from property, plant, and equipment, because that's the order they'll be in. It'll be current, then property, plant, and equipment. Where do you draw the line? Well, we kind of know cash, accounts receivable, and inventory. They're going to either be used up or become cash within a year, right? So they're very liquid. So I just know that. I just know those are liquid. But if you didn't, you could know, okay, well, land and anything with accumulated depreciation is a property, plant, and equipment. So you know, because Arena has accumulated depreciation, that it's property, plant, and equipment. All right, so there's where you draw the line. This is current. This is PPE. All right, now, next is your liabilities. And you have to figure out what's current, what's long-term. Well, current is anything you're going to repay within a year. And they pretty much always say payable except for unearned revenue. And notes payable, I'll just have to tell you if they're long-term or not. Bonds payable are always long-term. Well, let's just say they're always long-term. You could have one that's not, but they are. All right, and plus it comes after notes payable long-term, so you know it's got to be a long-term because they're in order. All right, and so there you go. So then you have your equities, common stock, paid-in capital in excess of par common, and preferred. Theoretically, you could have paid-in capital in excess of par preferred, and that would be about it. So there's your equities, your paid-in capitals, and then your retained earnings is down here. All right, so let's get to making a balance sheet. I went ahead and put the title at the top. Just, make sure you do. Don't forget to put the title. That's like a point. All right. And, I like to draw some lines so that I kind of stay even while I'm doing stuff. All right. So I'm going to write all my account names here. Little subtotals here. Next totals here. Final totals, like total assets, they go out here. All right, so just going in order, right? So we know that these are our current, so cash, and it's going to go out here. Cash is $760,000, and accounts receivable is $160,000, and inventory. I'm just taking all of these right off of here, off that trial balance. Inventory is $250,000. And that was it, right? Because the next thing that happens has accumulated depreciation, the arena, so that must be PP&E. So now we're ready to get our total current assets, right? Every time you have a title, you need a total. All right, so we add those up, and our total current assets are $1,170,000. Now we're going to do property, plant, and equipment, and I'm just going to abbreviate it P, and E, and you can too. That's an E. All right, and we just have the one arena. All right, arena, and it's 750,000. And then we have the accumulated depreciation for the arena, which is 250,000. So the book value is 500,000, and that is, of course, total. There's not any more. If there were more, you would include them. Total PP&E, right? You subtract that, so that's 500,000, right? And so then now we're ready to get our total liabilities, total assets. So 1,170,000 plus 500,000 is 1,670,000. That's total assets. Now we're going to move on to liabilities. All right. And of course we start with current liabilities. Let's see what we got. Well, we decided that accounts payable and interest payable were our current liabilities. And that is 90,000. And again, I'm just taking these numbers right off of here. And what was our other one? Interest payable. And interest payable is 17,000. So you add those up, that's going to be your total current liabilities, and so that's 107. Next we have long-term liabilities. I'm just going to abbreviate that LT. Alright, and we have two. We got notes payable, and we got bonds payable. Notes payable are 65,000, and bonds payable, they are 500,000. So of course that is equal to 565,000, and that number there is total long-term liabilities, and with that number and that number we can get our total liabilities, which is 107 plus 565 is equal to 672,000. Alright, total liabilities. Next part, of course, is the part we learned in Chapter 13, the equity. So stockholders' equity comes next. And we've got the two parts. We've got paid in capital and then retained earnings. So we need a new title here for paid in capital. And we got three. We got common stock, which is 500,000. Then we've got paid in capital in excess of par common. And that's 100,000. Then we had some preferred stock. Preferred stock, which is 200. So you add all those up and they're 800,000. That is what we would call total paid in capital. Finally, we have to add the retained earnings. Remember, not the old ones, the new ones. So 198,000. That's retained earnings. So 800,000 plus 198,000 is 998,000. So that number, of course, is our total stockholders' equity. And last line of the balance sheet is total liabilities and stockholders' equity. Okay, what number is that? Well, that's 672,000 plus 998,000, or 1,670,000, which does match up with our assets, so our balance sheet balances. So that's pretty cool. All right, I think you can do that. I look forward to looking at your tests.